Welcome back. Well, hope you're having a good morning. Plenty to discuss in terms of all the stocks that are in news. So let's get in Amnish Aggarwal, the head of research at Prabhudas Lilladher, who joins us. Hi, Amnish. Thanks a lot for joining in. Well, there was that news flow earlier today that Vivek just told us about on NTPC as well as Tata Power. Both of them have signed MOUs with the Rajasthan government. Tata Power actually last week was quite strong as well. What's your view on both these two counters?
Good morning, Nigel.
Morning.
You see, both Tata Power as well as NTPC, I think all these companies are now going in for more and more renewable capacity. And we have seen that in the past few years that the valuations of renewable companies in general or pure renewable plays, they have been on the higher side. So as the proportion of renewable grows in their portfolio, I think the valuations for some of these companies can catch up. And that has also been reflected in the valuations in the last, say, 2-3 years in particular. Now, coming to NTPC, I think their NTPC Green IPO is already in the pipeline. So I think this shift towards renewables will continue and these companies will continue to have good valuations. So I think it is positive for both the companies if the share of renewables in their overall generation goes up over the coming few years.
All right.
Okay. All right, Amnish, got that point. Amnish, just want to get your thoughts on gold financiers because there's this advisory that came out from RBI yesterday. They're flagging off a lot of issues with respect to whether proper due diligence is happening or not, and whether the norms are being followed when there's auctioning, and whether end use of funds is being properly monitored or not. So a lot of things that the RBI is raising. They've not singled out any company per se, but your thoughts and whether you still like the space and how would you approach it?
You see, gold financing has been growing over the years, but usually the people who have been taking gold on loan, so it is usually considered as a, you can say, last resort if anyone goes for taking the gold loans. Now, it is very difficult for any entity to monitor what is the end use of such a loan. That is one. Secondly, your volatility in the gold prices also impact this. And if you look at, say, numbers or otherwise, I think whether it is auctioning, whether it is, you can say, your use auctioning, you see, all this trade, I think it is not that transparent, and going by the fact that a lot of these loans also happen and very small ticket sizes, it is not easy to monitor that. Now, given the fresh directives which have come from RBI, I don't rule out that in the near term, it is going to impact the gold financiers in terms of their growth rate because they will have to rejig their systems, they will have to improve the processes. So by the time I think the dust settles and the new systems get into place, I believe there could be some sort of a slowdown in growth rate, which could also impact the stocks in the near term.
You know, I was thinking IIFL, right? Those gold loan curbs were removed. But look at the stock. It's basically below where it was when the restrictions were removed by the RBI. So, you know, March, the restrictions came that they can't do any more gold loans. And just last week, they said, well, RBI removed those restrictions, but the stock's not gone. Actually, it's lower now. So I think, I don't know if market had a small inkling of something like this, that maybe, you know, the regulator is not very happy with that segment of loans. But the fact that they're being able to allow to do it, and we spoke with the IIFL management as well, has absolutely done nothing for the stock per se. Amnish, you know, auto sales numbers today, and I think we've got one or two, and we'll get more through the course of the day. Yesterday, stock sold off, and there was that report. I think there was a UBS report which was also going talking about very high inventory levels. Hero was down 4-5% yesterday. Just your thoughts here.
You see, the month of September has not been good for any category in the discretionary segment, and auto is no different. Now, specifically in autos, I think last 2-3 quarters, two-wheelers were doing well, but even in the last, say, month and a half, two-wheeler sales have also seen some sort of a slowdown. Your cars and PV inventory, any which ways, there remains at elevated levels, and all eyes are now on the coming festival and wedding season. So I think in terms of numbers, the numbers are likely to remain weak for the September month, which are being reported. And it all depends upon how the numbers go up in the, say, next couple of months in particular. So I think in anticipation of that only, there might have been, you can say, some sort of a sell down in these stocks.
View on this particular company, recent listing?
No, Nigel.
Okay.
No,
all right. Okay, no worries. Let's talk about the cement stocks. Amnish, as a house, how are you all viewing them? You know, the quarter two is going to be a very, very terrible one. Offtake wasn't great. It's a monsoon season, so seasonally weak as well. And they won't really get the benefit of lower crude prices in quarter two. But that benefit will start flowing in the second half of the year. So suddenly you'll start seeing some optimism on some of these cement stocks because price increases should come through, demand should pick up, and petcoke prices are at multi-year lows. Your view on this space and what do you all prefer?
Okay. You see, in cement, particularly South and East are the two regions which have been weak. And this year we are also having the prolonged rains. Plus, there was a slowdown in the projects also around the election time. So 2Q any which ways is not likely to be anything great for cement companies, but incrementally your raw material scenario or the input cost for them, that remains favorable. That is one. Secondly, once you can say the weather stabilizes and the demand picks up, some price increases are likely, but it depends how much price increase they can hold on to. Because as we have seen in the past, the cement companies have been taking the prices up and then the prices also tend to go down after a while. So all it depends on how the demand pans out. If the demand remains strong and the projects pick up, then we would actually see the prices remaining firm, and which in your benign input cost should benefit the cement companies. So we remain constructive on the cement companies. The overall real estate as well as infra demand should drive the cement companies. The three stocks which we have been very positive about, I think they are all large caps led by your Ultratech and Ambuja. And if you look at the Ambuja and AC, the valuations of ACC are at, you can say, steep discount. So I think overall, the outlook on the cement companies remains positive. Near term, it could be a little jittery, but when little bit of optimism creeps in terms of any price increase or all, these stocks are very fast to, you can say, move up or react.
Yes, absolutely. That's a fair point to make. Amnish, one more stock, Interglobe Aviation. There's again favorable news coming in, and while we're still waiting for a fuel price cut in terms of motor spirits, I think on the ATF side, the cuts have really been coming through, so it's good going. Interglobe has had a great year, right? The stock's doubled in the last 12 months or so. Do you like the story here? Because, I mean, how else do you play? The fact that travel and tourism is booming, either you play it through an Interglobe or maybe through one of the hotel stocks. Your thoughts here?
You see, tourism is one space we have been very positive about, and I think Interglobe is, including, you can say, some of the hotel companies, I think it is one of the best places here. Now, you see, the markets have consolidated here. The market share is strong, but more important, you see, the ATF prices have come down. And with the ATF prices coming down, I think particularly in the festival season, it is a big positive. Because in festival season, your pricing power is better. And if your ATF prices are also benign, I think it gives them some leeway even to reduce the prices and improve the traffic. Or otherwise, if you can say you just hold on to those gains, your margins are going to improve. So I think barring, you can say, your volatility here or there, in the near to medium term, I think the outlook on the stock still remains positive.
Any look into SpiceJet? You had Plutus Wealth Management that bought a large chunk yesterday. I had spoken to Mr. Singh and I asked him a couple of questions. He said he's going to clear the GST dues, which he's done. He's cleared the employee salaries as well, which is good. But from a shareholder perspective, what's your view? They've got that required 3,000 crores. Is it enough to claw back some market share from that 2.5%?
It's difficult for me to say whether these funds will be enough or not. But having said that, you see, aviation today gives one of the best opportunities in the discretionary segment in India. And SpiceJet has been there, I think, for around close to 15, 20 years. But somehow they have been not able to get their act together in terms of service, in terms of, say, pricing or routes and controlling their costs. Now, this fundraising has been happening at a very frequent intervals. I think once they clear their dues, and I think if they are able to increase their market share a little bit and improve their overall positioning, I think given the fact that there's a lot of scope in the aviation space, we have seen even some new brands in the low-cost airlines coming in. I think if SpiceJet is able to deliver, then I think there's a significant, I would say, scope for this company to improve. But again, the million-dollar question is that whether they will deliver this time around.